Welcome back. Walmart has been making some big bets to maintain its competitive edge amid a shifting consumer, namely in the grocery and food space. Our Melissa Repko is here to discuss. You got to sample some of these new offerings, I understand.
Yes, it was definitely one of the most interesting and memorable parts of the trip. We went to the Culinary Innovation Center, which is where Walmart develops a lot of these different food items. And it's come out with a brand new brand called Better Goods. It's a little bit more premium, has a lot of chef-driven items, but 70% of those items are $5 or less.
Wow.
So some of the items we tried were like creamy jalapeno corn chowder. We tried a raspberry cardamom jam that they put on a sourdough cracker, and they put a little prosciutto on it. They were trying to show us how you can get creative with these cheaper type items and that you can have more interesting flavors for less.
Do you like them?
You know, I was pleasantly surprised. It was, of course, a beautiful presentation. And so it was interesting to see how they kind of mixed and matched different items. And it comes at a time when the CFO has been talking about how people are looking for cheaper alternatives to fast food. And so one of the things they're trying to show is how they're trying to make it very convenient and easy.
Easy. I'm thinking easy. That's what I'm thinking.
Yes.
Look at that.
Is this the typical fast food customer? I mean, why not just say we've got $4, fries and a hamburger or something? It's an interesting twist.
Well, this was a more elevated type thing they showed. Of course, the caprese salad is something that you might see on a menu of a fancier restaurant. But what they were trying to show off was the vinegar, the balsamic vinegar on top, and the truffle salt on top. And the truffle salt is actually $7, a little under $7. Wow. And the balsamic vinegar is a little under $3. And most of these items we tried are not yet available in stores, but are rolling out in the coming weeks, and they expect to have about 300 items by October.
This is a private label of theirs that they're pushing here.
Yes, and while it's a fun thing to show off to the analysts and the media who attended like me, it's mission critical for their business because you'll remember about 60% of Walmart US's revenue comes from grocery. So as they see players like Aldi and Lidl trying to grow, they have to get more creative. Even some of the flavors reminded me of what you see from Trader Joe's. Some of these like creative types of
I was thinking this feels a little like a foray into the turf that has been owned by Trader Joe's or Lidl or Aldi. There's a big emphasis on store brand. As opposed to national brand.
And the advantage of private brand here, of course, is that you offer flavors you can't find somewhere else. So the more creative you are, the more competitive you can be in kind of making that person come for their favorite child snack or their favorite meal solution. One of the interesting things they showed off is we tried a bunch of different appetizers. Think like game day snacks. And all of the different frozen appetizers cook at the same temperature, with the idea being if you're busy and you're preparing for a party or a child's birthday, you want it to be as easy as possible. So they developed that as part of it.
So everything is at 375 or whatever.
Exactly, because those little headaches can make such a difference when you're short on time.
Yeah. Oh, yes.
Oh, yeah, you know about that?
We've got a party coming up Friday afternoon.
Oh, do we? Okay.
Fully outsourced.
I'll be there. I'll cater.
Great. If you could just bring a few apps, that would be great.
Yeah,
Melissa, we'll take some Walmart offerings, too.
Are you going to stick around for this next segment? Walmart is trading higher after getting an upgrade to overweight from neutral over at JPMorgan. The firm saying the retail giant adds a strong balance of defense and offense on both the top and bottom lines in a soft consumer backdrop. The analyst behind the call is Chris Horvers. Welcome, Chris. Good to have you with us.
Thank you for having me.
So you think this stock has a great pairing of offense and defense. Explain that reasoning and how it manifests itself in what it's doing.
Well, it wins championships. At the end of the day, we're seeing some signs that the consumer is getting weaker. A lot of my companies have discretionary goods that should be rebounding in the back half of the year, and that's the way most of the street is modeled. If you think about a Target, a Home Depot, and a Best Buy, we're looking for a name that has self-help in terms of taking share on the top line and on the margin side so that you can see continued upward earnings revisions.
You think that this stock may go on a multi-year double-digit earnings per share growth rate, and so you see profitability improving as well as sales, I guess.
Yeah, that's right. So if you think about Walmart's mix, it's about 60% grocery and about 30% general merchandise. Walmart is gaining share on both sides. On the grocery side, it's innovation, like that former bit that you just did, designed to continue to grow share with that middle income plus consumer. They're growing through great price investment and assortment upgrades, but also now the vendors are coming in behind it because they need to drive units, and Walmart's the biggest player for them. So we expect continued gains on the consumable side of the business. But that 30% that's general merchandise, that's where they're competing with Amazon. And what was on displays last week was they are improving the assortment and they're speeding up the delivery, and they're starting to grow that business 20, 30%, and it's just becoming more significant.